Guess who it is? It's me again. I've got my signature roll neck on, I've got my granny blanket, and I've got my cup of tea that I never drink in front of you. Have you ever heard of someone say,
I've been investing in ETFs.
and you're just like,
What the heck is he talking about?
what is it, ET? What? Go home? Well, I'm glad you tuned in on this episode because that's what this episode's all going to be about. ETFs. Welcome back to another episode of Money Talk with Hermie. I am your show host, Herman, but everyone here calls me Hermie. So what exactly is an ETF, or an exchange traded fund? We're going to work backwards in order for us to figure out the definition of it. A fund is like a basket holding many different things. In this case, it holds many different stocks. And this basket, or fund, is traded on an exchange, hence exchange traded fund. You might be wondering, okay, well, what exactly is an exchange? An exchange is where a company lists their stock on sale in the marketplace. A good way to imagine what an exchange is like, it's basically like a supermarket. You go to the supermarket and there are many different things on sale. That's because companies list their products or stocks on sale on an exchange, much like companies listing their products inside a supermarket. And your basket, the fund, is like you going to the supermarket and purchasing many different items. And this fund will hold various different stocks. Another great way to look at what a fund is, it's like a variety pack. It has many different flavors and many different things inside one packaging. That's what an exchange traded fund is. So now that we have defined what an ETF is, what exactly does it do? As I mentioned earlier, an ETF trades on any stock exchange. Therefore, it actually trades throughout the day, much like individual stocks. So just how like an investor can buy and sell individual stocks on an exchange, they can buy and sell individual ETFs on an exchange throughout the day as well. Generally speaking, the trading volumes on an ETF is not as high as individual stocks because people buy ETFs and to invest for the long run. This makes ETFs a great option to investing inside a mutual fund offered by the bank. So what makes an ETF so great? An ETF, compared to a lot of other types of funds out there, is a lot more liquid. Because it trades on the exchange throughout the day, investors can buy and sell an ETF as long as the exchange is opened. They also have a lot lower MER.
Okay, can you stop with the jargon, please?
An MER stands for Management Expense Ratio. It includes the management fee for the fund, as well as any trading fees, as well as any types of other ancillary expenses. They also have a lot lower MER compared to, say, a mutual fund. A mutual fund generally averages out to 2 to 3% for MER, whereas an exchange-traded fund can generally range from 0.01% up to 1 or sometimes just a little bit over 1%. Now, does that mean a lower MER or a higher MER means it's a better product? Not necessarily. It just depends on what exactly you're investing in. An ETF also offers greater clarity and transparency compared to other types of funds out there. An ETF is very cost effective as well. Because you're buying one fund that owns many different types of stocks and assets in there, it avoids having purchased different individual stocks. Think of it this way. If you went and purchased one stock, you have to buy and you have to sell. Each time you make a trade, there you have to pay a commission to the brokerage. Now this fee could range from $4 anywhere to $11 depending on who your brokerage is. Every time you buy and sell something, you have to pay them. Whereas if you just buy one ETF, it can hold a basket of these stocks and it already has all these different types of stocks in there. There are also various different types of ETFs out there. An ETF could own many different types of stocks, as I mentioned before, or it can own a specific sector of stocks. For instance, there are ETFs for just banks or financials, or there are other types of ETFs out there that invest in a particular region. And guess what? If you're watching this and you're super interested in cryptocurrency, recently there's been several different companies that launch Bitcoin-focused ETFs or cryptocurrency-focused ETFs. So instead of just buying one type of crypto, now you can own a basket of it. Think about that. Another great thing about ETFs is that they offer investors a lot of diversification. Diversification basically means that you are not putting all your eggs in one basket. Say if you're putting all your money in one stock and that stock does not do well, what's going to happen to your money? You're going to lose a lot of it, right? So by diversifying your assets and your investments, essentially what you're doing is you're putting various eggs into different baskets. So in case even if one basket doesn't do well, you still have your other baskets and they may do well too. So it's sort of spreading your risk around in order to protect yourself in case there's a downturn. ETFs are generally known for passive type investing. Passive means that there isn't really an active management and there's not a lot of trading within the fund itself. So you usually find these types of ETFs, they do index tracking. So for instance, I can buy an ETF that tries to mimic the motions of the TSX, for instance, or the Toronto Stock Exchange. Or I can track something like the New York Stock Exchange. It won't necessarily beat the index, but it'll more so just track the movement of it. So if that year the Toronto Stock Exchange returned 10%, then that passive ETF may return like 8% or 9%, something very close to that. Then there's something called actively managed ETFs. Fund managers make some trades within that fund and they're actively monitoring the fund returns itself, and they also try to beat the reference index. There's no like per se what's better and what's not better. If you're more like a hands-off type investor, then maybe passive investing is the way to go for you. But if you like different themes or particular type ETF, then perhaps a actively managed ETF is more suited for you. But buyer beware, actively managed ETFs generally come at a bit of a higher cost. So you have to make sure that the ETF is actually doing well and the returns are consistent and there's a good track record, as well as the fund management is good team. Otherwise you might end up forking out more money for the management fee and you have lower returns. Over time that can eat into your returns, and if this is for your retirement, then it could quite significantly diminish that. So what are some bad things about ETFs? For starters, here's the thing. There's so many options out there. You don't even know where to start. There's asset allocation ETF, different types of ETFs based off of geography, sectors, thematics. There's so many, and the investors will probably kind of get confused over it. Heck, you know, sometimes even me.
I look at some of them like...
Another thing is that if you don't really have a choice in how the weighting inside an ETF goes. So for instance, if an ETF inside holds specific companies that you don't particularly like, or maybe you want more exposure to USA and less exposure to Canada, for instance, you don't really have a say in the percentage on where the funds go inside ETF. Everything is more or less predetermined for you and you're just investing in it. And now you know what an ETF is. So guys, that was my high-level overview on what an exchange-traded fund is. You're bound to come across somewhere or some publication or someone's going to say ETF or investing or something along the line. As always, if you've enjoyed the video or you've learned something new, please go down there and hit the subscribe button. It really helps me out. It lets YouTube know and the algorithm gods know that my channel is growing. And while you're down there, please hit the little bell icon as well so you can get more content just like this whenever I upload it. And if you have any questions, please leave me a little comment down below or go down to the description box and send me a quick email and I will try my best and answer your question. Thanks for tuning in on this week's episode of Money Talk with Hermy. I will see you guys next time. Bye bye.